It's an upside surprise on retail sales. We come in at 0.6%. The estimate was 0.3%. The previous number, a revised positive 0.3%. An upside surprise if you strip out autos month on month. For the month of July, we come in at 0.5. The estimate 0.3. And stripping out autos and gas, we come in at 0.5. The estimate 0.4. So positive revisions to the previous month and some solid numbers compared to the estimates for the month of July.
Yeah, and as you say, Jonathan, there's quite a swing, actually, when you put in those positive revisions from last month. Okay, let's bring in now Lara Rhame. She is FS Investments Chief Economist, and Ira Jersey, Bloomberg Intelligence Chief U.S. Interest Rate Strategist. He's joining us today from Princeton. So, Lara, I want to turn to you first. You're seeing these on the Bloomberg as I do. This is a pretty positive number.
Yes, and it was badly needed. We had downside surprises for the last 2 months, so the upward revision, the solid number for July. You know, let's keep in mind, this is a volatile number, so it's sort of on consensus. It's not a wild upside surprise, but we need that reminder that the consumer is still there because we've been the workhorse of this entire economy throughout the expansion. So so goes the consumer, so goes the economy.
So did you expect this, or what factors went into what you anticipated?
I think it'll be really interesting to strip out the non-retail store spending numbers because, you know, we've seen a lot of online spending, especially in July. We had Amazon Prime Day. You know, we're still trying to figure out, and I should say the Census Bureau is still trying to figure out how to adjust for that, how to seasonally adjust for it. So we keep hearing such bad news about retail, and the reality is, you know, activity is activity, whether it's online or not. What we need to see is that the consumer is still a positive force for the U.S. economy.
So let me give you some detail on that through the numbers. So non-store retailers was up 1.3% month on month, but clothing stores were down 0.2%, but department stores up 1%. That to me was actually surprising because we've seen a negative print 2 months in a row for department stores, and this is the best print actually for department stores since January of this year.
Yeah, I mean, I think, you know, we have all the right fundamentals supporting the consumer, right? We've got strong jobs, we've got that consumer confidence at a 15-year high, and we're seeing wealth effect from a lot of other property values, stocks. I think everything's there for the consumer. What we need now going forward is income to help compensate consumers who are continuing to dip into their savings while they're spending.